Hello, and welcome to another episode of the Seasonal Tokens Podcast, where Polar interviews people so you can do more investing and less gambling.
When I have been talking with a lot of my friends, all of them have given me different opinions, and always there are a few mistakes that have costed them a lot of money. And while we were thinking, I was trying to analyze most of the answers, and I think that I can put all the answers in one sentence, and it is that all the mistakes that they have done have been because of lack of knowledge or lack of patience. And you mentioned both things, and you have learned them earlier than them, and they have done different mistakes, all of them, but the main thing, actually these two things are the main things for all of them. So it's really great that you don't feel that there are some regrets and you're doing the things right. So what you would advise someone about the sustainable crypto investing based on your experience?
The key to building wealth is to buy great assets and hold them for long periods of time. If you really study how people get wealthy, they don't get wealthy day trading because you're taxed at a much higher rate. It's more of a job. You want to build wealth, you've got to buy great assets and hold them for long periods of time. But if you really want to grow wealth faster, then you buy great quality assets at discounts to their normal valuations and hold them for a long period of time. Okay. So for anybody that's listening that they bought crypto when it was cranking in 2021 and they have this real regret because their portfolio is down by a lot. I'm sure it is. You have to be down at least 50% probably. If you really gambled, you're probably down 70, 80%, right? If you bought a lot of altcoins instead of Bitcoin and Ethereum, right? You're probably down more than that. You didn't make a mistake, okay? You made a mistake if you sold it out and panic sold. But if you held on to it, you do not need to regret the decision to get into crypto, okay? If you want to not make another mistake, then you want to be buying crypto right now when it's on tremendous sale. It's at a massive discount to what the true valuations are. Why did crypto crash so fast, so hard? Was it because the economy is that terrible? No. I can't speak internationally. I know Europe's having some challenges with energy pricing and, certainly probably a little bit tougher there in the US, although I'm not 100% sure, so I can't speak to that. But I do know in the US, we have almost full employment. Earnings for companies are still very strong. We have this, uncertainty of very high inflation. I get it. All the governments around the world just went on a massive printing spree during COVID. So we're also experiencing that along with supply chain disruptions, which is causing prices to really spike temporarily. But at the end of the day, our economy is still very strong. So why did crypto crash? Well, it really ultimately crashed because of over leverage. So many of these crypto companies invested and bought more crypto with borrowed money. Investors were doing it. They were borrowing money to buy crypto. And when the price started to drop, which it naturally does with crypto, it's going to drop, and the inflation concerns and what the Fed was doing with raising interest rates, that definitely freaked the market out. It probably should have been like a 10, 20% drawdown. Well, instead, the drawdown just got more and more severe. These companies were forced to liquidate. So it was a forced deleveraging, a forced liquidation event that happened. So this is irrational. There are projects, there's nothing wrong with crypto. Crypto's Bitcoin, Ethereum, those are all still working just fine. There's nothing wrong with any of the projects. It's not a crypto problem. It's a over leveraging problem is what we just experienced. So all that massive leverage had to get cleared and forced out of the market so the crypto market could be more healthy. and it's very healthy right now. Contrary to what you're probably seeing and reading, crypto market's a lot healthier with all that leverage out of the system. Now, is there still some possible shoes to drop with, a couple other companies could go out of business? Possibly. I think we've probably seen that happen as far as like Coinbase is not going out of business. Nexo doesn't appear to be even close to going out of business, right? Binance doesn't seem like they're going anywhere. So a lot of the big exchanges, right, they're not crashing. They're not going out of business. So I think with the two major catalysts that are coming up, which we can get into, crypto right now, if you're not buying it right now while it's down and you were buying it up when it was high, I think you're making a massive mistake.
Yeah, absolutely. I definitely agree with you that what is happening right now, even though like people are very scared and there are some guys that are saying that we're going to see the real death of crypto, which is definitely not happening, is a good thing for the whole industry, for the whole ecosystem. Because like you said, all these investors, they have been leveraging a lot because they have been very greedy. They have wanted to become multi-millionaires and billionaires in a very short amount of time. And they thought that they're very familiar with how leverage works in crypto. But I believe that no one knows actually how the leverage in crypto works because it's still building. Like it's not an asset that has been around for like hundreds of years. And you have a lot of cases to analyze. So you can say like, this time this is going to happen, or this time this is going to happen. And in all cases, I would say that even if this was the case, if crypto has been with us for hundreds of years, it's not always the case when the history repeats. So there is a risk again. There isn't an asset that is without any risk. And I'm sure that you can say more about this, right?
Yeah, there isn't an asset that doesn't have any risk, right? But there's assets that have little to zero risk, right? I mean, you can get a whole life insurance policy. Those companies been around for 100, 150 plus years and never had any issues, even through world wars, depressions. They still continue to create profitability and pay out, but they're only paying out 3 to 4%. So you can buy bonds. They're going to pay out 2, 3%. And there's still risk with what happens with interest rates definitely affects the prices of bonds. I mean, we know stocks, of course, are a great way to store and grow wealth, but they've dropped as 50, 60%. There's a lot of stocks that dropped 70, 80% in this last crash, right? So the best way to de-risk yourself, so to speak, is to get the bulk of your money into safe cash flow producing assets. And then you take the income from those assets, and that's what you use to speculate. It's in gambling. If you've ever heard the term, you're playing with house money. That simply means if I sit down with $1,000 and I go up to $2,000, then I take the original $1,000 off the table. Now I have no risk of loss. Okay. So now I'm just playing with the house's money. And if whatever happens from there, I can't lose. If I lose all that, I'm out.